Welcome, everyone. Good morning. Welcome, Doc, to this
Thank you.
new session on our SPX daily plan. We're going to go into the levels, into the charts, but before we do that, let's just go over our disclaimer. And then if you guys have any questions at any point, just feel free to post it in the comments. Just a few seconds. All right, Doc, I'll pass it your way.
Okay, good morning, everybody. They call me Doc McGraw. I'm not going to go into the backstory of how I got that nickname. And what I'm going to do today is I'm going to go over mostly the SPX levels and kind of a daily trading plan that I write, and you can see it on Twitter, and it's posted in the Mental Q Discord for the subscribers, and talk a little bit about the plan and how I arrived at it, and see what we could see in SPX, as well as might go through some other tickers. Okay, so first thing that I mentioned in my daily plan is we have big options expiration tomorrow. We have the AM expiration, and we have the PM expiration for SPX, as well as single stock options. So I'm going to go over the plan, and then I'm going to kind of try to go back and forth between the screen and the options chain to kind of show you some of what we're looking at. But basically for today, this is the inflection point. You can see right here, they call it call resistance. There's call open interest there, there's put open interest there, and this is the inflection point. Let me see if I minimize the screen. Okay, good. If we look at, okay, here's the open interest for today. You could see at 59.50, there's about 2,000 calls there. So that's kind of the inflection point or the resistance. If we can get over that, then market makers have to start hedging in the direction of the move. They have to start buying, and then this becomes the next level up. And we can see those levels here on the chart. See this, here it shows this gamma level, then it shows the intermediate level, and I'm not going to go through every strike on the chain, and it brings us up to there. So what I like to do is look at the chain, look at the levels, and kind of come up with my plan. Now, just to put things in context, okay, so we had that big rally yesterday on favorable CPI data. VIX tanked. VIX went from, let me find VIX charts for you guys. VIX was hovering over 18, was over 20 a few days ago. I was hovering over 18. And once we broke below 18, you see that was a 1D max. Once we broke below 18, VIX just started pretty much collapsing down to 16. I mentioned that in my daily note yesterday. If you follow me on Twitter, that if we broke 18, 16 was the target. And since I'm doing a decent job switching screens, let's take a look at the VIX option chain. So again, the data that you see on the chart is crunched from the option chain. And what we're trying to look at is gamma, or where the dealers are going to have a reflexive hedging response, basically a prescription to buy or sell. And remember, if they have to buy, the way they're going to hedge VIX calls is by buying VIX futures, which is going to have a spillover effect into the chain, into the volatility in general, into the chain. So what's the big deal? What was the big deal with 18 yesterday and still there? You have 150,000 puts open interest, that should be a long. Clearly, customers are hedging by buying the puts or buying the calls, and you have 160,000 calls over there. So roughly equal amount of calls and puts. So as we're up over 18, these calls go in the money, the deltas get higher, and the market makers have to keep buying VX. As we get to 18, the deltas would be more or less equal. It would be about 50 delta. And that's like your inflection point. And then as we get below 18, then the put deltas start to increase. And then the market makers have to start selling. And as a matter of fact, that's what happened until we got to this next level. Until we got to the 16 level. So now you see where these levels come from. And I didn't show you the 20 up there, but 20 is where all those calls were that we went above. So we have VIX. We have VIX that we came down to 16, and now it's kind of popping back up. So now we have that inflection kind of heading the other way. If we get too close to 18, we have that story again. Another thing that's interesting about today, and I'm going to go back to the other screen. So today we have the QYLD roll. What's QYLD? QYLD is an ETF, a quote-unquote income ETF, that what they do is they buy the underlying constituents or long-dated, fancy, deep in the money option that like retail can't buy in NDX or the NASDAQ or the constituents. And then they sell calls against it monthly. They sell the at-the-money AM call against it, and whatever income it generates is what it generates. But unlike some other funds, QYLD in their prospectus tells you that they buy back these short calls. They're price insensitive. If they're in the money, out of the money, if they're a 2 delta or a 100 delta, they don't care. They buy them back. So today, QYLD is going to be buying back roughly 5,000 calls in NDX. So there's going to be an infusion of buying call delta, of buying power in the NDX, which most of the constituents are also big weights in the SPX, which tends to serve to buoy the market. When that comes in, it usually comes in around 11-ish. I keep telling myself I'm going to remember when it comes in. Somewhere between 11, 1, and 2, somewhere in there. You see it start coming in. I just keep checking the chain. And once I see the volume start to pick up there, that's when I'm looking for some bullish action. May get it, may not get it, but that's just something else in the back of our minds. Okay, so let's get back to TradingView. So from just back to TA 101 perspective, we're basically at the 20 and 50-day moving average crossover. Well, we crossed the 20. We're almost at the 50, and so there's going to be buying interest or selling interest if we can cross over it or not. So that's another thing. All of which is making this 50 an important inflection point. And so then we go through the well, actually, before I get to that, going out in time, there's some potential tailwinds to the market. Not immediately today, but what might be supportive to the market, and your guess is as good as mine, your crystal ball is as good as mine, is we have corporate buybacks starting. January 24th, according to whoever I read, I think Rubner from Goldman Sachs, 45% of the S&P market is expected to re-engage. Market cap is expected to start their corporate buybacks. The other thing, so that's going to be a kind of tailwind. The other thing that's potentially happening is as interest rates were up, one of the trades was short the long end and buy the short end of the yield curve. Again, I'm not a macro guru, but we know that that was a crowded trade. So now that rates went down with the CPI, with the inflation story, now there's a lot of people short that long end of the curve that are going to be buying it back, covering, certainly not shorting anymore. So that could cause a potential bond short squeeze. CTAs are near record short the long bonds. So again, covering that short of the long bonds, you buy bonds that sends rates down. That's another potential tailwind out in time. Potential, we don't know. So that's in the background of my mind, our minds, as we're kind of just looking at the landscape. And if I know it, I think the big boys know it too. Okay, we have some unemployment numbers today, I believe, at 8:30, so coming up soon. The expected move in the chain when I looked in the morning was 35, so that would put us roughly up, a little bit below the one-day max, and the one-day max is over the expected move, but we could get there. And the 35 points would put us down pretty much near the one-day min. This is like a high volatility area. So if we grind down to 40 and we fail to bounce near these levels down here, you see the GEX2 level. This is the level that if you're a bull, you want to see hold. If you're a bear, you see that break, and you could get kind of a sharper move down toward here where we might get a stall. I'm not saying that could happen. I'm just saying if then, and remember, if then trading 101 levels, you cross a level doesn't mean you keep going to the next level all the way. You can cross levels multiple times in a day. Today's basic shop zone or consolidation zone is going to be roughly 40 to 60. Roughly 40 to 60. The wider zone that I identified, we'll call it 59.20 or 25. I guess went a little bit below that, and 55.90 on top. So this is kind of the wider thing that we could play in if we kind of reach or exceed the expected move on either side. And we have the options, the gamma, to support that. And so, extremes, of course, we could break. We've seen crazy things. Yesterday, 59.50 seemed pretty extreme. We got there. And so the extremes would be, 25, even 50, who knows? It's a crazy world. And down here, maybe 58.50 on the downside. We don't want to see this thing break. I'm not saying that's going to happen, but I'm just saying in my trading plan and in my world, I keep a little mental asterisk next to that. Now, what else is going on? Taiwan Semi beat. Taiwan Semi, the largest semiconductor manufacturer, the one that China wants to steal from Taiwan when they take it over. Not a political statement. So you saw on the Taiwan Semi news, NVDA popped over 140. Now it's kind of pulling back right at this core resistance level. So remember, these core resistance, these are at the money calls. If dealers have to start hedging, buying NVIDIA toward this until customers start selling, and then that process reverses. So clearly watch NVIDIA. What kind of spillover effect does that have in the semi space? Well, let's take a look at this. Let's take a look at some semis that I like to look at the semis because they have a lot of volatility. They move a lot, and I'm a trader. I like to trade, and the more movement I get, the better it's a trade. So look at this, level to level, boom, boom, level to level. It's right there on the chart. AMD, let's take a peek at that. Some of the names, some of our favorite hits. AMD stalled out right up there. We want to see AMD really needs to get above 120 and kind of hold it respectably and get higher for it to get on its horse. Let's go through some of the max. Let's see. Do you believe yesterday's large move was related to large volume of puts at 5,800 and 5,900? Broadly speaking, yeah. A lot of yesterday's move was the market was bared up. There were lots of puts near the money in that whole range, a lot of puts out of the money. And it was predictable. Once volatility goes down, the deltas on those puts decrease. So the deltas on the puts that were, whatever it was, that were, let's just say, at 5,800 puts were a 30-40 delta. And even without price moving, just the volatility drop causes that. Now, market makers are not stupid. They know this, and so do we. And they know that as soon as the event happens, an unknown becomes a known, and the volatility comes right out of the chain. And as soon as the event happened, the data got released, market makers hedging just took this thing right up. So the beginning move was market maker reflexive hedging took us right here. And then afterwards, the put expiring delta acted as fuel. Exactly, Joel. And that's exactly what happened. It's exactly what happened. And so then the other thing we got to ask ourselves is, what fuel do we have in the tank? Now, let me minimize my screen again, because while gamma is greatest, closest to the money and closest in time, and the zero DT always plays a very important role, we also have, as I mentioned, the big AM and PM expiration. If I can find it. Is this? Okay, so that's VIX. Crap. Okay, I thought I had the image. All right, we're going to take two. We're going to do it this way. Okay. Yay me. Okay. So what we're going to do instead, we're going to take a peek at what's going on in the chain. So for tomorrow, the AM expiration expiring in the morning at the open, last trading day is today. We have 39,000 puts, roughly 34,000 calls, roughly equal-ish, a little bounce to the put side. Now, we don't know if they're long or short, if they sold straddles, what combination plate there is, but we do know it's a high liquidity level, and this is important. So what happens? Do they roll them? Do they not roll them? Are they gonna let them expire? So the 50s tend to be important inflection points in the AM expiry. Institutions like to play at those round numbers. And we have 6,000. We have these ITM puts here at 6,000. Were these 6,000 strike straddles that were sold back in December? Who knows? But another inflection point. So if we can get moving and heading toward here, and these deltas start to shift, then it's up, up, and away again. And just kind of looking through the chain, you can kind of imagine what the hedging effect is going to be if we can get moving. If we can get moving away from these 59.50 puts and these calls go in the money, and we got some not that chunky volume, but we have 5,000 calls here at 70 in the the AM, and we got another 2,000 here at 70 in today, and in the PM we got them at the 75 and at the 60. There's suddenly calls are back in style. Suddenly calls are back in style. So it would be hard for this thing to break down. What I would like to see, and of course I don't get what I want, what I would like to see is us chop and consolidate within yesterday's range. Give me an inside day. Give me an inside day. Okay, let's get to QQQ for a minute, because QQQ is interesting. Getting back to that NDX short call, that call roughly corresponds to 520-ish in QQQ. So just imagine, so there's 5,000 of those, so that means 50,000 QQQ notional equivalent calls at 220, at 520 rather, they're going to be bought at some time today. Roughly, I'm not sure what delta those are now. Those were a 50 delta before. Maybe they're a 40 delta now, whatever it is. It's chunky, it's close, it matters. So, you know, I've got a little QQQ scalp that I set up ahead of time, anticipating this. We'll see how that works out. And we'll see. And so that's something I'm going to watch today throughout the day. Let's just go around the horn at the big boys and girls. Apple, round number 240, no shock. Calls are there. We failed over there. We have a pretty wide range for Apple. Now again, remember, single stock, the largest single stock options expiry is today. It's Friday. It's in January. And so institutions will be rolling, have been rolling. I don't know how many of you watch the volume, but, you know, I'd see these, you know, orders, you know, whatever it is, 8,322 NVIDIA calls, January, whatever strike, and the same number of calls, March, or something like that, same strike, or maybe 5 points above or whatever. So all that rolling is going to be going on, and depending if they're long, short, what they're doing, how they're rolling, that's going to add noise or chop or direction. Just another thing to keep in mind, especially for stuff like NVIDIA, especially for names like let's take a peek at Meta. Let's look at Amazon. Amazon's at an interesting spot here. We crossed above that 220 level that we've been talking about in the room as kind of a buy signal. And so we're kind of near our destination again. So a lot of this depends on what happens, and not just in this name. What happens with these 220 calls that are in the chain for tomorrow? Are they sold? Are they bought? Are they rolled? What happens to the puts in the chain? They're near the money. And so those are all the little things that are going on. Let's take a look at, okay, so AMAT, I'm sure, got a pop on the semi-manufacturing. You see, AMAT was struggling at 170 a couple days ago. Nice move. That's why I like the semis. Nice move. You don't get that in Procter & Gamble. And so, again, ask yourself, I'm asking myself, what kind of pin action does the Taiwan semi earnings result have? Looks like it has had some in the pre-market. Is it going to stay, or are people going to opportunistically go in to buy individual names or the sector? Now, SMH, we know that, well, I know, and people that are in the room with me know, 250 is a key inflection point, and we're over. Now, what happens in semis is you tend to get a lot of dispersion. One semi goes up, one semi goes down, and the index doesn't move as much as, say, NVDA. And when NVIDIA goes down, because of the way the dispersion trade goes, often some of the other ones go up. Tesla broke out above that 400 and I guess went to the moon. Just went to the moon. 450 next level. Do we get there? Who knows? I would think that this move gets faded, but I don't know. We have numbers in 2 minutes, so I'm going to get back to SPX. Okay, so now SPX is back above that at 50 level. 50 is, our mental reference point for today. Below 50, we have that 40-60 zone where we can just kind of chop around and get attracted back to 50 and repelled, and to 60 and repelled down. Any other comments or questions while we're eagerly anticipating this number?
Nothing yet on here.
So somebody asked, mentioned Microsoft. I'll mention Microsoft. They report the 29th. That's a good observation. Joel said how fast that gap closed just shows how strong that move is. This is the kind of move that one would expect continuation, consolidation. We kind of hit that election gap. This is what we do in the room. A lot of times we just kind of chop it up and, talk about the market and technicals and gamma and all that. So where's our election gap? Here we go. Here's our election gap somewhere in here. And we kind of almost retraced our election gap, and we're back. And for those of you that have been following along at home, 5750 was also the September high, which was the JPM collar in September, the large JPM fund that often acts as a magnet. And incidentally, we have 6020 as the JPM collar for the end of the month, but it's only 9,000 contracts, so it's smaller, but it matters because it stays there. It's invariant. It doesn't move. They don't close them. Unlike QYLD that closes it, they leave it. Their customers pay them. They get their 2 and 20, whatever they get. They don't care. It stays there. So if one were thinking of a longer term swing, and I have some on long term into the end of the month, into February, not that you have to hold it till then, 60-20 is a nice target. 60-20 would be a nice target. Maybe you fly centering on 25. Maybe break the wings a little bit, or asymmetrical, selling a little bit more on top to do it, to get a cheapie, giving yourself enough room for decay. So numbers came out, I guess, right? We had unemployment numbers. Hi, Tom. Didn't we get unemployment numbers today, or am I somehow mistaken? Anyone have Twitter handy? I'm afraid to touch anything. I'm gonna mess up the.
Let me check.
You know me. I'm. Although I do some of this stuff with the charts, I am far from a techie, folks. I'll be first to admit it. I'm kind of like a forest, a trees for the forest guy. I know how to plant these trees. I have no idea what's going on in the forest. Retail sales came out. Retail sales climbed 0.4, estimate 0.6. So is that bad news, good news, bad news? Inflation, retail sales are slowing, so the economy is slowing, so the Fed can cut rates. Ish narrative, you know. And so right now the algos are deciding what they want to do. Jobless claims are flattish. Okay, so nothing really to trade off if they were expecting something. Okay, so a little bit of slowing in retail sales. I see gamma exposure. Tim there is in the chat. So tell us a little something about what we could think about, how we should think about the retail sales number. 0.4 versus estimated 0.6. So they climbed, but not as much as expected. So to my non-macro bro mind, that tells me that if there's the rate cut narrative is still in play. The one that was killed last Friday, that was resurrected on Wednesday, is still in play. Yeah, Tom, that's pretty much 80% of what I do. It's not a data source that's a big importance here. Okay. Okay, well, never mind. Okay. That's why I asked you, because I could overinterpret the data because I don't know which is important, which isn't. I mean, there's obviously the big ones that we know are important. And so now it looks like 50 might want to fail. And, you know, that's basically the plan for today. Going out a couple of days, we have the big expiration on just kind of a little roadmap with no exact levels, but keeping an eye on the ball. Friday, we have options expiration, single stock expiration, expect volatility in both, in either direction, both possibly. Monday, we have the day off. So we have a little extra theta extra decay coming into Tuesday after the inauguration. And, you know, Trump will, I'm sure, won't say anything that the markets are going to pay attention to. We have the inauguration, and then that same day, Tuesday, we have VIX expiration, and we talked about the VIX levels 18, 16, 20, and as if we head up to 18 and get over the convex effect that'll have. Same thing if we stayed below and we get towards 16, that effect if we break 16. We've also had realized volatility at a level close to what's considered fair VIX. Fair VIX is considered 2 to 3 points VIX above realized vol, and if you do a trailing 1 month or whatever, we've kind of been there. So the vol controls funds will maybe start slowly dipping their toes in the water, and that's another potential headwind. Not straight line into the end of the month, into maybe early Feb, mid-February, maybe February OPEX, and then reload. We all know February to March tends to be a bad month. If we're going to get that correction, that 10% or whatever, or close to it, it's going to probably happen somewhere February through March, like we had the COVID crash, like we had Volmageddon. Feb to March tends to be that way. It's structural, it's there, it's just the way of the world. And then March, of course, we're going to have the big JPM expiry that they rolled from December, but we'll talk about that during another episode of this. Okay, I'm just about done. If there's any questions, please, if you have any questions, comments, things you like, things you don't like, things you'd like included. Can't guarantee that I'm going to be able to do it, but worth a shot. I'm not thin-skinned, I'm old, and so one of the privileges of being as old is that your skin toughens. And so, any constructive feedback about how to make this go better, understanding that I'm not techie and don't expect a slide deck because I don't even know how to open one, let alone prepare one.
Yeah.
Okay.
Thank you, Doc, and that was amazing. And as always, you can also reach out, find Doc direct into the chat. Within our training room, you can also find the daily preparation that you create every morning. And so for those who are interested in joining us, you can also find our 0DT SPX chat right there. With all the content that we provide on a daily basis. So for those who are interested in doing what Doc does, you can find us, sign up for our premium membership, and you can join us in the training rooms and see all the different.
Yeah. Also, just show them the stocks channel and so for example, in my spare time, because I woke up early today, I sifted through some gamma levels and some technical analysis, and with the magic of I'm messing around with Claude, I asked it to sift through names that had bullish gamma, decent technicals, sorted by market cap and by sector. And here's some names. There you go.
Yeah.
Potentially bullish names. Not saying they're buys or sells. I'm saying it's a starting point if you're a trader. I'm assuming that you're a trader and that you're not looking to be spoon-fed. I mean, sure, we don't like to be spoon-fed, but that's not going to happen. Starting points for you to all use your own individual methods, whether it's FIBS, TA, fundamentals, whatever it is. And we also have some broad ETFs there too. Ideas, that's all.
Yeah. Awesome, guys.
All right, thanks.
Thank you, Doc, and thank you, everyone. And please, if you want to join us, send us a message. You can also create a free account right here. Join us on Discord, and see you again next Tuesday, Doc.
Okay, see you next Tuesday, everybody. Have a good weekend. Trade safe.
Bye-bye.
Bye.